Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Let's talk about Epigral now. For Q2, company reported a strong set of numbers with revenue surging 32%, profits saw a 111% jump. To discuss the company's Q2 performance and the outlook going forward, we are joined by Maulik Patel, the chairman and MD at Epigral. Maulik, good afternoon. Thank you so much for joining in today. But it's been a good set, but you did indicate that it was largely driven by volume growth. Realizations have been lower. One, how much lower have the realizations been? Has this trend continued in Q3 as well? And what is leading to the pricing pressure in domestic market for caustic versus the global markets? That's where prices are steady, right?
No, it is changing from last month. Caustic prices are going up, and I think in the last quarter, I think this existing quarter, I think the prices are moving on the upper side because of the global demand. So caustic price is mainly driven by the metal demand globally, and I think it is going high. And the same time, the chlorine, which is a co-product along with the caustic soda, that demand is downward. So because of the co-product demand is downward, the caustic price is going up globally.
Okay, so realizations are improving across the value chain for your products. What's about volumes as well? Are they as good as what you saw in Q2?
So yes, volumes are increasing in Q2. Volumes are not increasing Q2 compared to Q1, but year on year we are 17% up in H1 compared to last in FY24. And in overall in H1, I think this year we are quarter on quarter. I think volume is not moving up because of the couple of products, which is CPVC and epichlorhydrin, which is mainly it is not picking up in terms of the in the monsoon season because there is a demand always lower side. And we are expecting, I think, Q3 and Q4, the demand of the ECH and the CPVC will pick up.
Maulik, good afternoon. Thank you for joining in. What's driving this bullishness of yours on the CPVC and the ECH segments? Are you able to currently sell at full capacity? And what's the outlook looking like for the second half?
So ECH, we have almost reached to 80% capacity and we are operating at 80 to 85% operating capacity right now. And CPVC, we just expand our project in March, commission our project expansion in 45,000 tons, which is close to capacities become 75,000 tons per annum. And we are operating at 60% capacity right now. So we are expecting in Q3 and Q4, probably in end of Q3 and Q4, probably we'll reach to almost 70-75% capacity of the CPVC as well.
So, as Hormaz asked, Maulik, what is driving this bullishness that you have? Because you're going to be doubling your capacity, right, in both these products. Are you already in touch with your current clients? As they asking for more volumes coming in from here, or are you getting newer clients? Give us the rationale.
Yeah, so both the project which is mainly going in the infrastructure project, and the epoxy resin, which is a major application for the ECH also. And that is also going in the infrastructure, automotive, and the renewable energy, which is windmill majorly. So all these sectors are booming in India, and we are expecting the growth in both the sectors for both the products in double-digit growth in next 5 years. And that's why we are wanted to be ready because we have a first mover advantage in India. We are the first one to manufacture as an import substitute in epichlorhydrin as well as in CPVC. So we wanted to take this advantage and we wanted to be ready before the demand picks up in India.
Apart from these segments, then, Maulik, is there any other opportunity that you are looking at, both organic and inorganic, if you could share that with us?
Yes, we are looking for, I think import substitute is a focus and our 90% sales in the domestic in India. So we are looking for a more value chain, which is import substitute and the demand is picking up in next 10 years based on the infrastructure and the chemicals demand. So we are looking for a new value chain in the newer location in existing which is not in existing location, and probably we are looking that particular growth in the newer location, new value chain probably after FY28.
Okay, after FY28. Till FY28, will you largely be done with the Capex that you had announced earlier, be it the chlorotoluene chain, you have ECH and CPVC as well. What's the outlook on Capex for, say, next 2 to 3 years, and how will you be funding it?
Yes, so we have recently done the QIP, which will going to help for the growth of the Capex, which we have announced, ECH doubling the capacity and the CPVC capacity, which we are going to do almost 780 crore Capex in next 1.5 years. which we are planning to commission in Q1 FY27. So till FY27 and FY28, our growth is coming from the expansion of the CPVC and epichlorohydrin and the existing capacity, which we have not reached on the optimization level yet. And the chlorotoluene, which is another value chain, we are also working on an import substitute, which is majorly used for the agrochemical and the pharmaceutical intermediate, which we are planning to commission by end of this quarter and almost by Q4. So this will drive the growth till FY28. And after FY28, we are planning for we are working in a new value chain, which will give us a growth for after FY29 and FY29 30.
What about the chlorotoluene capacity, Maulik? Is this for the export markets or is it India specific? And part 2 of my question is if you could also share the domestic export mix currently that you have.
So currently, as a company overall, we are having a 90% domestic market and 10% export market. To answer your question about the specific on the chlorotoluene side, definitely it is going to be 50% on the domestic and the 50% export. But eventually, the specialty chemical companies are growing the volume, and then the more and more opportunity will increase in India. Eventually, this ratio will increase towards India more and less on the export.
So you will also keep overall, split between 90-10 for your overall portfolio. Is that the trajectory that we can look at, or will it change and maybe tilt more towards exports in some case?
See, product on product, there may be difference, but as a company level, definitely our focus is on the import substitute and on the domestic market more. But as we are expanding, so we are just keeping as a backup as an export, because when you are expanding too aggressively, sometimes Indian market is not ready that point of time when we commission the plant. So we wanted to de-risk ourselves a little bit. That's why we are keeping a 10 to 15% export continuously.
Okay, all right. Is there good demand in the export markets right now, Maulik? Which are the countries that you are catering to? Because Europe has been talking about lower demand. Is this something which is hurting exports in any way?
So in terms of demand, definitely there is no growth other than India globally. But looking at the problems in Europe, many chemical plants are shutting off. So there is a demand in the short term right now in export opportunity in European side. And probably we are expecting in the future, probably the duty comes on the other countries, which will also pick up the demand in the American region also, if the duty will come on Chinese region. So that is possibility in the future. But right now, the major demand is coming from the European side for Epigral.
All right, Maulik, we leave it at that. Thank you so much for joining in, sharing with us your views on the quarter gone by. Wish you good luck for the second half as well. That was the management of Epigral, the stock currently trading at the flat line. But time for a short break here on Midcap Radar. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.